Hello, welcome to European Open briefing for Monday, August the 27th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So it's a fairly steady start to the week. We did see a big slide in the US dollar on Friday following that speech by Jerome Powell at the Jackson Hole symposium, where he didn't sound as hawkish as many had been expecting. So this boosted US equities. We saw the S&P 500 and the Nasdaq closing at record highs, and we're seeing a boost to Asian and European indices this morning as well. Also boosting risk sentiment this morning is the move by the People's Bank of China to reintroduce its counter-cyclical factor in fixing the midpoint for the yuan. On Friday, we saw a bit of a rally in the Chinese yuan, and this has boosted Chinese equities this morning. We can see the CSI 300 and the Shanghai Shenzhen Composite up by around 2%. Despite that, though, we still don't have any progress in the US-China trade talks. Last week there were low-level talks between the two sides, but didn't produce any results. On the other hand, there does seem to be progress on the NAFTA renegotiation. It's being reported that the Mexico and the US are close to resolving their differences, which we could then see Canada rejoining the talks, and then beyond that, an agreement could be weeks away potentially. Despite that, the loonie is a little bit softer this morning. USD CAD is trading around 1.30 at the moment. The euro is also softer, but it's managing to hold above the 1.16 level. Sterling is also more or less flat, currently around 1.2840, though UK markets are closed today for a bank holiday, so there's likely to be thin liquidity in European trading today. The Australian dollar hasn't benefited much from the risk-on sentiment, though that's mainly due to profit taking following a sharp rally on Friday after a new Prime Minister was appointed in Australia. The Aussie is currently trading around 0.7312, and if you have a look at commodities, gold prices are marginally lower. It follows a big rally on Friday, so we saw the precious metal rising to 2-week highs as the US dollar was sold off. If you now turn to the major performers, the dollar index is recouping some of Friday's losses. It's up by just 0.14% at the moment. At the bottom of the table, we've got oil prices, and Kiwi dollar is also one of the worst performers, as well as Aussie dollar and Euro yen as well. Let's now have a closer look at the dollar yen pair. We can see the pair had been rising for much of last week before turning lower on a Friday after Fed Chairman Jerome Powell said that he doesn't see much chance of inflation accelerating above the Fed's 2% target. So this suggests that the Fed isn't likely to become more aggressive in terms of its rate hikes anytime soon. And Powell also reiterated the policy of gradual rate hikes. So this was somewhat a bit more dovish than had been anticipated. So that's why we're seeing some dollar weakness since Friday. The dollar did briefly slip below the 111 level before rising back above that level, though this has been positive for equities, as we saw US stocks rising sharply with the S&P and the Nasdaq closing at record highs. Let's now turn to the Chinese yuan, because on Friday the People's Bank of China resumed the use of its counter-cyclical factor in calculating the midpoint of the yuan. We saw dollar yen touching a 2.5-week low of 6.8030. It's currently trading around 6.8150. This does just demonstrate that the recent slide in the yuan wasn't down to intervention by China's central bank, but more due to the Chinese currency coming under pressure due to concerns about the US-China trade war, which although there were some talks held last week. They didn't produce any outcome, so that will probably likely limit any near-term gains for the yuan as well as for Chinese equities. But it does suggest that the People's Bank of China does seem to have a tolerance level. Potentially, that tolerance level is around the 7 level, the 7 yuan level to the US dollar, and we're likely to we could potentially see for the time being at least a halt to the yuan's slide in onshore trading. And finally, looking at the Australian dollar, we can see the Aussie did fall sharply around the middle of last week before that rally on Friday. The Aussie had fallen, had come under selling pressure after the Prime Minister, Malcolm Turnbull, faced two leadership challenges last week. The final one on Friday, we saw him resigning, and the Finance Minister Scott Morrison being appointed as the country's new Prime Minister. So Scott Morrison is seen as market friendly. Therefore, we saw the Aussie rallying sharply, climbing back above the 0.73 level, and we're seeing some profit taking today. We're seeing a bit of weakness in Aussie dollar this morning, despite the risk on sentiment. The focus, though, will now turn to some Aussie data. We've got building approvals, we've got private lending figures coming up, but the main one will be the second quarter data on capital expenditure, which will be a strong clue to the second quarter GDP growth numbers that are due next week. And finally, it's going to be fairly quiet for the rest of the day with just the German IFO business survey data to watch out for. That's it from me. Thank you very much for watching, and have a great day.